Hi guys, I'm going to be going through 4 simple tips for what you should be doing as a teenager to set yourself up to succeed financially. From the moment you turn 18, this step-by-step process is exactly how you should be looking to invest your time so you can get the most financially out of your early years. To be honest, even if you're not a teenager and you're in your 20s, it's still worth giving this a watch to make sure you're doing all these things, because I certainly wasn't doing these things at 18 and I wish I was. This is the type of video I wish I had watched when I was a teenager, and is the advice I'll be giving my kids, which is top of mind for me at the moment because my wife is expecting her second next month. For the record, I stupidly didn't follow all these bits of advice, and the reason I'm sharing them is because it was completely stupid of me for having not done so, and I want you to avoid making the same mistakes I did. And you can by watching this simple 5-minute video. Kids, when you're older, follow this advice. Now, trust me when I say, no matter how much you think you know it all right now, you don't. And I also know if I said that to me at 18, I would have said, bullshit. I know. No matter how much time you have or how much money you have or what you want to do in your life, if you just watch this video and it triggers you to do just 1 or 2 or a few of these things we're going to talk about, I guarantee you will get ahead financially. Now, sit back and let's get into it. Number 1, the moment you turn 18, go and get a credit card. Now, you might be thinking, wait, what? William Gale is encouraging me as a teenager to get a credit card and therefore the potential to credit card debt, but that isn't the point of getting a credit card at all. Let me explain. A well-managed, long-held credit card could help build your credit score. If you have a good credit score, that could improve your chances of being accepted for credit in the future, when you might actually need it to invest in a property or buy your first home or invest in a business. The reason it improves your credit score is you are proving that you're able to responsibly hold and use credit, that you have proved you can pay your bills on time and in full. If you prove you can responsibly use debt and pay it off on time, it is then more likely lenders will feel comfortable giving you more debt in the future. So it is just so important you only spend what you can pay in cash at the end of every month, because if you misuse your credit card, get into debt, miss payments, then it obviously isn't going to improve your credit rating, but it's going to damage it. So if you've not got one, pause this video, and I mean pause it right now. Go online, and it's usually the easiest thing to do is to go to your current bank provider to apply for a credit card, because they've already got all your information on file already. Or you can just research online and you'll find something that works for you. If there's one regret I have, it's not sorting a credit card sooner, because at the time it felt scary having a credit card. It felt irresponsible having one, that using a credit card was only used if someone didn't have the money in the bank, whereas smart people that use them to build their credit rating. But also there's a whole host of other benefits as well. For example, when you buy anything with a credit card, you get extra protections if something goes wrong with your purchase. So because your purchase is protected by law, so if for some reason your goods are faulty, damaged, or you never receive them, you should be able to claim your money back via your credit card provider. Whereas if you use a debit card, it is way harder to get your money back. Also, most credit card providers offer points or cash back when you purchase things. So with my Amex, my American Express, I'm able to use my points to get discounts on flights, on upgrades, all for free. And if you're wondering how credit card providers can pay you to use their cards, it's because when you pay for something, they're charging the person or business you're paying a fee for receiving the transaction, and they're basically kicking back some of that charge back to you, which is why some places don't take credit cards. Number 2, go and open a bank account. Now, I sort of assumed just now that you already have a bank account. So if you do, don't worry. But if you don't, or you have a shared bank account with parents, then it's just so important you pause this video right now and set up your own bank account in your name. It's just So important you have a bank account in your name that only you have access to, as this is really the first step to building an independent financial future. If you get a job or you need to make payments, it's really important people can pay you and you can pay for things directly. And most importantly, this applies to if you already have a bank account. Make sure you're opening a bank with a provider that isn't charging you any monthly fees or isn't requiring you to make minimum payments. My bank provider actually pays me to bank with them. Not a lot, just a few pounds a month, but there are plenty of accounts that I could pay for that will offer me all of these nonsense benefits that in reality just aren't worth the money. You basically want to make sure you are never paying any fees to bank. In principle, the bank should be giving you money through interest, not the other way around. If you're not sure who to bank with, Google online banks, and you're probably going to have a bunch come up in your area. I'm not sponsored by any banks. I tend to find online banks are the best at providing banking services for free or at the lowest cost because they're online. They don't have physical locations to pay for, whereas with traditional high street banks, they've got the legacy sites that they're paying for. They tend to get charges and fees slipped in somewhere. The only downside really to online banks is they are online, so you're not going to be able to walk into a physical store on the high street. So if that is something you like doing, which it would be odd if you did, but if it is, then stick to your high street bank. But if that doesn't matter to you, then online banks are the way to go. Number 3, set up a retirement account. So in the States, you want to set up a Roth IRA, the UK, a personal pension account or a SIP. You're probably thinking it's a bit early to be thinking about retiring, but quite literally, the earlier you think about retirement, the easier it is to retire. Did you know every 10 years you put off investing for your retirement, you need to save double the amount every month to end up with the same size pension by the time you hit 65. That is all because of the power of compounding. I didn't set up a pension when I turned 18, which was a massive mistake. Not because I didn't want to set one up, but because I honestly didn't know how to do it, what it even was. Now I know I'm having to put a lot more aside now to make up for it. If I could go back in time and watch and like a video like this to prompt me to set up a retirement account, I 100% would do. So don't delay and get it done. One of the things you have to realize is if you are 18 or even if you're in your 20s right now, you have to understand that Millionaire's best friend is compound growth. If right now you're 18 and you start investing $200 a month every month for the next 9 years, and then you stop investing at 27, by the time you reach 65, your $200 a month, $2,400 a year, $21,600 over 9 years will compound to $2.35 million. If you want to guarantee becoming a millionaire, start investing small but early, then use all the time you've got until you're 65 to see if you can make millions other ways, like building a business or building a great career. But do yourself a favor and create yourself that millionaire safety net. Number 3, stay out of student loan debt. Now, I know this is a controversial point, as if you want to be a doctor or a lawyer, you obviously have to go to university or college to earn your qualification, and I'm not against that. And for most, you're going to need a loan. But bear in mind right now, only 18% of current graduates think the current cost of university education is good enough. It's good value. You have to look at uni and college as an investment, not 3 or 4 years of partying, because there are cheaper ways to do that, or 3 or 4 years of figuring out what you want to do, because again, there are cheaper ways to do that. If you're set on going to uni or college, there are ways to do it that will help you achieve a degree with as little debt as possible. 1, apply for any grants, scholarships, as many of them as you can. When I was at uni, because I was dyslexic, I could apply for a laptop, for grants, for textbooks. But to get those things, I had to actually apply for them. I wasn't just given them. So make sure you apply for as many benefits as you can, because there are lots of people that don't, that are due them. 2, commit to working part-time. Trust me, you can make the time, and I'm not saying you should get a full-time job. Even just 10 hours a week is going to drastically help your finances. Whilst I was at university, I didn't work at all during term time. but then worked full-time over the holidays. I was lucky I had a job that let me pick up as many shifts as I wanted over the holiday time, but there are ways to fit jobs around your preferences if you look for them. And finally, 3, go for cheap or free accommodation. So the ideal scenario is you want to live with family or friends, ideally. I know it may seem a bit rubbish it being at home during uni, but you're 18, you have to realize that if you want your life to be easy, you need to do what is hard. Or worst case, look for the lowest cost accommodation, which will usually be sites off campus, or you might have to give up benefits like an ensuite bathroom, but who cares? You'll get used to it. If you decide to invest in university or college, you have to understand the less you spend doing it, the easier it's going to be for you to make it a worthwhile investment down the line. It's like any investment. If you overspend, it might have been possible for it to have been a good investment, but overspending has destroyed the profitability of it. Number 4, live on less than you make. I said earlier, saving just $200 a month in an investment account for 9 years from the age of 18, and then just stopping and leaving that money there will compound to about $2.35 million. Every dollar or pound you save today is worth more in a year, much more in a decade, and much, much more in 20 or 30 years' time. If you want the guarantee of being a millionaire in the second half of your life, start putting the small amount aside now to invest, because it's easy to do if you learn to live on less than you make. Now, I know there will be some out there that are genuinely living hand to mouth, but for most people, not being able to live on less than they make is nothing about how much you earn or they earn, but about psychology. We earn more, we then buy nicer things, live in a bigger house, drive a nicer car. 26% of people surveyed with an annual income of over 100 grand in the UK said they had no money left at the end of the month. Among those earning 150k or above, 12% don't have enough savings. Imagine that. You earn that much money and you can't save enough. Why? Because of lifestyle creep. We earn more, we spend more. We seem to forget that building wealth is about the difference between what you earn and what you spend being as big as possible. You want to save and invest as much as possible. For example, over the last decade, I have barely changed my income as such for my businesses. I pay myself what I need to live well. So I live in an average house in a nice area, and I live a very normal life. I live well, but I'm not extravagant. But I am saving and investing probably 80+% of my net worth. If I wanted, I could afford to live in a multi-million pound house and drive an Aston Martin rather than my Tesla, but I wouldn't be saving very much, if anything at all. Learning this principle of living on less than you make as early in life as possible is just so important. True power is best left concealed. You don't need to show off your earnings, mate. Now, before you go, do me a favor and like this video if you want to see more of me. Subscribe. And just a second before you go, YouTube's algorithm seems to think you'll like this video up here. See you over there.